Okay, welcome back, everybody. This is my first, a couple weeks into the new year, but this is my first interview of 2024. I've got Thesis Gold with me today. Before I introduce my two guests here, though, standard disclaimers always apply, right? Blue sky. This is a blue sky conversation. Forward-looking statements will be made, so please, standard disclaimers always make your own investment decisions. But I've got Ewan Webster and Ian Harris here today from Thesis Gold. They're going to give us a campaign review, drill campaign review on their lawyers project. Ewan is the CEO and is a geologist, and Ian Harris is the COO and is a mining engineer. So kind of like we got kind of the both sides of the brain here working with us today. So I'm hoping for a really interesting conversation. Thank you, gentlemen, for joining me. How are you guys today?
Good. Thanks, Matthew. Yeah, pleasure to be here as always.
Wonderful to have us. Thanks.
Yeah, I think, Ewan's a returning guest, but this is our first time for you, Ian. So welcome to the JRI experience, I guess, right? So let's just jump right into it, though. We are here. We're going to talk about the Lawyers Project, right? I mean, this is a recent amalgamation, right? Benchmark and Thesis Gold last summer. There's a merger that went on. Lawyers came into the new company. And so there was 50,000 meters this year. 20,000 went into Lawyers. And so just last week, you guys released your final 15,000 meters. So you and I, we were chatting last week, and we thought that maybe a really good opportunity for just a campaign review, as I mentioned, right? So why don't we, and we have some images about Ewan and Ian, why don't you just, first question right off the bat, do you guys just want to kind of very briefly reintroduce our audience, kind of assuming we know what you're talking about here with lawyers and ranch, but lawyers in particular here. But do you just want to walk us through the Lawyers Project? And then more to the point, though, right, is how did it evolve based on your drill campaign this year?
Sure. The Lawyers Project is a low sulfidation epithermal gold system. It's situated in north central British Columbia. It was a former past producer, high-grade underground mine. It was operational from the late 80s to the early 90s. And after that, it sat dormant for a couple of decades, really. And we acquired it in 2018. Kind of under the premise that we thought there was more potential there to build this out beyond just the high-grade underground mining scenario, that there was the potential for much broader zones of mineralization, and therefore, it had that open pit potential. And, I think over the last 5 years, we've certainly demonstrated that as the case. We've taken it from virtually, a very small resource in 2018 to 3.5 million ounces with a robust PEA associated with it. And that PEA was really centered around the open pit potential. And what we're looking at now, and what this year's last year's drill program, I should say, was really focused on, was that underground potential. We're going back to what they were doing historically and building that out below the pits. And Matthew, you mentioned we've got a couple of images here, so I'll just pull one of them up here. It's a pretty good job of representing what the potential is.
And as Ewan's pulling that stuff up, just a little bit of a context is we wanted to go into this year with, laser focused on what we actually wanted to achieve. And so it's not just about, we saw the potential impact, we looked at it, we modeled it, we've done a lot of internal work and saw the impact of especially areas that are easy to get to. So it's not just underground to add underground ounces. It's underground ounces because we think it can benefit the overall project design and the financial results. It's an early stage thing, not a late stage thing in this case.
Yeah, and I think that, Ian, you touched on that nicely, and this is why, aside from, I like the jurisdiction. I see clear pathways, 5, 6, 7 or more million ounces, right? That's not official yet, but I think that, when you talk about PEA to PFS to FS, that you're always seeing, that the best it'll ever be economically is the PEA, and that's where, again, kind of circling back to where I was starting here, is that this is kind of one of those rare moments where you might actually see market and material improvements to economics as we move forward into the PFS stage, because of this kind of remodeling with these underground ounces that you guys are mentioning, and what we'll talk about here in a second, right? So Ewan has these up.
Just all I was going to say with this figure is that this is from 2022 probably, but you can see some of the vintage of drill core there from 2020 through to 2022, some really strong results. But more importantly, you can see the model pit outlines and the block model, the resource, the mineralization, and really extending for hundreds of meters below the pits. And that was really the focus of this year's program, was trying to delineate and expand that mineralized footprint below those pits so that we could build in what will be kind of mineable underground resource to the future PEA. So you talked about being a material upgrade to pre-feas or feasibility studies, but in the near term, I think what you're going to see is a huge improvement over what was or what is the existing PEA on the Lawyers project, with the incorporation of underground ounces coming from Lawyers, in addition to some kind of higher grade near surface ounces coming from Ranch. So in terms of a near term engineering study, I think that one is the one that's definitely going to show a material improvement over the last PEA. So yeah, with that, I'll pass it back to you.
No, perfect. That is, I did misspeak there. Yeah, there's a newly updated universal MRE and a universal PEA with the new Malco coming up here. So that's my mistake there, referencing the PFS. But no, let's talk drill campaign, right? 20,000 meters into Lawyers. So I mean, kind of just as to frame this conversation, right? Drilling is all about confirmation, either to the upside or downside, right? So again, setting aside Ranch, we can come back and talk about Ranch in a couple weeks or a month or however that is. But where I mean, Ranch, lots of exciting results scattered all over there. But kind of unvarnished honesty, right? You got you guys here. You're sitting down with me. Where do these Lawyers results kind of match up with your expectations? If I can kind of steal oil and gas sort of terminology, right? P10, P50, P90. Where does this fit in with you guys from pre-drilling to now? How do things look?
So I think overall, I think it went as expected. And chatting to Ian earlier, he made a very good comment that at Cliff Creek we weren't. Some of the drilling we were doing at Cliff Creek was on the fringes of the core mineralization. It was to build out and kind of flush out what the extent of mineralization was, and so we weren't expecting crazy results from some of the deeper drilling there. But still still got very strong results. Well, we've managed to define the mineralization down over 550 vertical meters, and that system remains wide open. But at Duke's Ridge, I think that has been a bit of a surprise. Certainly, a lot of strong mineralization there. And maybe the next slide shows this quite well. This is the modeled, or the PEA open pit you can see here at surface, kind of outlined in brown. It's a long section through the Duke's Ridge deposit, and the colored dots are basically gram meter products. So anything that's red or is basically 60 gram meters or better. So the hotter colors are higher grades, and you can see the mineralization extended to depth here for kind of hundreds of meters below the pit. And these were the first results we put out at Duke's Ridge, and you can see, really strong mineralization at depth here, 57 meters at 2.5 grams, including 9 basically. And at the time, that was the deepest hole intercept on the Duke's Ridge deposit. And with a lot of good, strong visual mineralization below that. And the next slide, I think, is following up on that, where that strong mineralization continued at depth with more really good results, 53 meters at 3.5 grams, including 16.5 at 10. So excellent results, continuing to expand. And again, that system remains wide open at Duke's Ridge. And that's not to say that we're going to go in there and let's follow up on this, and that's our top priority for future drill campaigns. But the system remains strong at depth, is wide open. And I'd say, out of all the drilling at Lawyers this year, this was probably the highlight. Certainly Duke's Ridge adding to the extent of mineralization quite substantially. Ian, I don't know if you've got anything to add to that.
Yeah, just a little bit of context of why we're so excited about the Duke's Ridge is because originally we were looking at an adit, no, not spirals, not a shaft, anything else, taking advantage of the topography, working from the valley. And there was just a few little stopes in our internal modeling of we saw as an opportunity that could be pulled in and kind of on the way to Cliffs Creek. And so when it really starts blowing out in the Duke's Ridge, you're adding a lot of really good material really, really early into the program. We're talking to daylight, we're talking 300 meters horizontally, not vertically, horizontally, to get into this type of material. So I do want to take that step back and say we already knew
Did
and
you
had a
lose
good,
Ian?
strong idea. We knew the impact this could make, and it was really about polishing it out. And it's definitely concur with you in that the Duke's Ridge is the interesting upside that we saw. But we already know and had a really strong idea of what this impact this could have on the overall project. So even just hitting what we wanted to achieve is going to be a significant impact. And so Duke's Ridge was just really a cherry on the top.
Yeah, perfect. I think every resource explorer co likes to say open at depth, right? And that's kind of like that classic line that, whether or not it's based on evidence, but this is one of those times where it is actually factually based on drilling evidence where, you haven't reached the edges of these things, right? That it continues on at depth and along strike for quite a length. So if I can kind of interpret for here, right? So, Duke's Ridge gave you a bit more than you were, pleasant surprise to the upside. Cliffs Creek was maybe a little weaker than maybe you were expecting on the downside there. Any other surprises, kind of aside from those two? And feel free to disagree with my interpretation there too. But any other kind of surprises that maybe warrants kind of a conversation here?
No, I don't think so. I mean, it could, as Ian said, this drill program is very strategically planned. We basically, outside of Duke's Ridge, I mean, we basically knew the mineralization was there. We were essentially flushing out, the extent of it and continuing to expand it at depth. And we were pretty confident that we were going to hit. And really, it was about converting ounces to make sure that they make it into what will be an upcoming MRE and PEA, as you said. So, we had a lot of confidence going into this, and I think it's delivered as expected. So that's great.
And so I can't help but ask, right? And so I know that this lawyer's project is for a lawyer's property is fairly mature, developed at this point, right? So it's not necessarily that kind of the sexy Explore Co story or the exploration story, discover story, but are there places where, you think you see smoke, we haven't found the fire yet, right? If we're going to talk about a theoretical follow-up drill campaign, where would you target next for whether it be resource expansion, not upgrading, right, but adding ounces, resource expansion, or even just like pure discovery drilling? Is there more to be had here at Lawyers?
So on the Lawyers project at the moment, the most advanced target is Marmot, and it's had quite a bit of drilling through Benchmark. We didn't drill there at all this year, and there's a number of other exploration targets on the Lawyers project as well. Going into this year's exploration drill program, so if you rewind back to kind of this summer, let's say. We basically evaluated all the different targets across the Lawyers project and on the Ranch project on a number of different criteria, and then decided on that ranking system, evaluated where we wanted to spend our exploration meterage. And in my opinion, by far and away, the best exploration targets are on the Ranch project. And that's where all the exploration drilling went, basically. And, going forward, that is going to continue to be the case. So there are targets at Lawyers. I think there's stronger targets at Ranch. And that's where the exploration drilling will continue to focus. So I don't see any near-term surface drilling at Lawyers.
So maybe just this is kind of a capstone question here, but did you get what you came for? I mean, in terms of your pre-stated goals prior to drill campaign to now, you're happy with what happened, and in terms of you talk about redesigning the mine plan and adding those underground ounces. Did this match what you were hoping to see in terms of making that a feasible way to improve the economics on this project?
I mean, I might pass that one to Ian just to mix it up a little bit.
I think the easy answer is absolutely, right? We were really laser focused. We knew what we were doing, and it really wasn't about the real exploration upside is at Ranch, right? We just wanted to put a pin into what we saw as a huge opportunity, and that's what we did with this drilling campaign at the Lawyers, and I think we achieved it, and it is transformational. And so that's been one of the most bigger frustrations, right? Because market can be heavily driven by exploration and the story's not whole. There's a wealth of information. We put a lot of thought into it. We got a lot of depth in the organization that brings in project development and also the exploration side. So we knew what we were doing, and we're really excited about being able to get this news out to market of what this drilling achieved in a broader concept of what the project will really look like moving forward.
Yeah, I think that, I mean, Thesis is such a strong company, and I'm saying this, I'm trying to be objective, but I think that this is my attempt at objectivity, is to say it's a strong company with strong projects. But I mean, just the market, there's no love for develop codes, early stage dev codes. I think inflation's just eating your lunch right now. But I think at that point also, I mean, you talk about contrarian investing, right? I think that at the same time, circling back to, this is my own bull thesis for Thesis, is this ability to materially and markedly improve economics in a very real way to kind of counteract that. And I think that's kind of maybe getting lost in the shuffle a bit with the narrative around your company. So maybe to kind of put you guys, and maybe Ian, I'll ask you I'll put you on the hot seat here for a second, right? So, underground ounces, you typically want higher grade than open pit, obviously, right? And so you did have, under the open pit, you had these nice long intersections of mineralization, right? But maybe 450 meters down, but at a gram per ton or so, right? So maybe a grade that was typically more conducive to open pit versus underground mining, right? So can you speak to that? I mean, how do you square that circle? What do you do with 1 gram per ton intercepts, of 50, 60 meters or whatever they are, under your conceptual pit model in terms of making that work with underground mining or making it work with your new mine plan?
So I'm going to put our mind around it first. It's not a shaft. It's not a spiral. It's an adit into the side of the mountain, which is huge, to the side of the valley. So that's a huge starting point. We still are getting bulk tonnage intervals, but we're not targeting, obviously, 1 gram material. And what you look at, there's a very high-grade core in the corridor of mineralization, and you have some dissemination normally in the hanging wall. And so you get some broader areas. So as you get with depth, obviously, those fall off, but there's still a very high-grade core. It didn't really come out in a lot of the drilling because we were drilling around the periphery. We knew what the stopes areas were, and we're kind of really just trying to define them, polish them. I mean, that's the best way I can describe it. And I want to put it into context. We have a 10,000 ton per day project, right? And it was average, calling it almost a 2 gram equivalent ton basis. The underground material that we're targeting is between 4 and 5 grams. And if you could just increase 1 gram per ton in 1 year at 10,000 tons per day, is over 100 million, 150, almost 200 million dollars of additional profit. The original PEA had an NPV after tax of around the $500 million mark. So this can make a huge impact, right? And again, it's not necessarily just trying to chase ounces. It's about converting those ounces into mineable ounces. These were already below the pit, and being able to, you're getting so much out of it. You're getting more ounces. You're getting more mineable ounces. You're getting higher grade ounces, and you're getting those higher grade ounces earlier in the project. And we'll have the ability, we're looking, and we've done it, but we'll redo it. It's basically a trade-off of when do you stop the open pit and when do you continue to underground, which can reduce the overall strip ratio and the overall material moved, even in the open pit scenario. So we've been trying to get on the microphone and the megaphone and explaining this, of why this is such a big deal. And it's why there's so much excitement that we've achieved. We knew what we wanted to do. We achieved what we're going to do, and we're going to be putting out and using that information and really be able to get out to market. And I think really make a splash with it, because I don't know if it's really resonating, that the real deep understanding. But we're really excited about what this information is going to do. And again, these zones of 4 to 5 meters can be 10 to 20 meters thickness, reasonable mining widths to do a very bulk tonnage type mining. Yes, it's a little bit more expensive, but the bigger expense of underground mining is normally associated with the development. Sometimes development can be just as much as your OPEX for your mining costs. And so in these cases, it's such easy access. It's surprisingly, it's not, I think we have to break the mold of what we normally think about in terms of a 1,000-meter down shaft and all the development costs associated with it. Really, we're talking about a tunnel that could be, $10 million to put in to get into the side of the bill. It's not a huge additional ticket. And yes, obviously a little bit more expensive mining method, but also extremely selective, right? You're not going to really be having to deal with the waste. And so it's really interesting, the impact that it has on this project.
And I think, this is. So you go, Ewan, if you're going to follow.
No, sorry, I was just going to say quickly, I think Ian nailed that, but just to add a little bit to your question, Matthew, I mean, you can see on this cross section here pretty nicely, like those are modeled stopes in purple below the pit, or violet. And then that intercept from the last press release, the kind of headline hole, 120 meters at 2.5 grams. But, there's a broad interval of mineralization, but within that, so even if that was 128 meters of a gram, to your point, and there are some big intercepts in there like that, but the important thing is that within those bigger intervals, there's smaller 3 to 5 meter intervals of higher grade. And that's really what the target is here. It just so happens that they're within much larger zones of mineralization, but that those by themselves are not economic, but the higher grade zones within it are.
Yeah, excellent. No, and I'm going to circle back to what Ian said here, because I put these images together, so I blew it because there is a really good cross section that shows exactly what Ian was referencing there. That geology, or geography rather, is your friend in this regard. Where it's not a big shaft, right? It's just you can just kind of nice, gentle, just walk in right off the edge of the valley, right? And so I think that again, that kind of the gifts of geography here, it plays an important part to this.
And so I could maybe probably share that here quickly if anybody wants a visual.
Yeah, no, absolutely. If you got it, it'll save me time on the post-production side. So
yeah, there you go.
Yeah, precisely, right? So yeah, keep that up. And so maybe try to transition away from drill results, right? I think we understand that you met your expectations. This is setting us up nicely for PEA MRE work that's being done this year. You're talking about, so part of what your program was this year, though, I mean, there's met work and optimization studies that are ongoing behind the scenes, right? Can you discuss and as much as you can, right? Again, I'm emphasizing here forward-looking statements, this sort of thing, right? But can you discuss just the optimization studies? How did these results impact those studies? I mean, how have you tweaked from before, in March or whatever, right, when you started planning this program, to now it's January with the results back? How have your conceptual underground plans changed with these results?
I mean, Ian might be better suited to answer this question, but I can give you the 40,000 foot answer anyway. I mean, for our planning, I mean, we internally ran all these numbers and what the underground scenario may look like and what those volumes may look like and what the addition of these ounces could do to the project. And that was really what the drill program was based around. And, we've executed on that very successfully. As you said, Matthew, I mean, I think we've hit that mineralization as expected. It was, couldn't have gone better. So in terms of how that impacts the study or how it changed our thinking, I don't think it has really. I mean, it will certainly have a very positive impact on the PEA, but internally we knew that going into this. So with that, maybe I'll pass it over to Ian.
Yeah, I don't think there's a lot more to add. We knew what we were doing and we wanted to do, and we had hurdles that we wanted to achieve with this work in order to make a decision whether or not it was worth doing. Because we obviously have a lot of drilling in these areas already. We had a strong internal model. We just were incorporating it, looking at it, et cetera. And we had things that we wanted to achieve, know the transformation it can have on the project. And I think that we achieved those goals and we'll be able to beat our internal hurdles. So really, it's not going to be about reinventing the wheel. We're going to be picking up and just brushing off work that we've already been doing over an extended period of time. There's a lot of stuff happening behind that velvet curtain. And I'll be honest, one of the reasons we're so excited is because we really want to be able to tell about that internal work. But with the 43101 process, it has to come out in the technical reports before you can really beat the drum. And we really want to get on the megaphone and be able to explain. And right now we can just give, ideas and concepts, but that will really be able to be the ability to put it onto paper and show what this can do and the impact it can have on the project. And guess what? On top of it is the material from Ranch, which is just another another added layer. So obviously, we're very excited about the conclusion of this drilling, finishing and getting all the results in, and getting and revamping and re-updating the work that we've been working on.
Well, I think that the Toodoggone region you guys are in. I mean, I think that you're kind of headlining some renewed interest in there, right? I know that there's been some JV that's been going on there, or kind of some M&A that's been happening. Let's talk about network though, right? And flow sheets. I think there was this reference there a little bit, and so again, I know this is preliminary, right? So let's again kind of that emphasis there, but flow sheet on lawyers. What's it like? And then I guess maybe are there expensive parts to it that people should be aware of? But then more to the point in terms of this conversation, and this is where I will kind of dip a toe into ranch, is that based on your preliminary work that you have, I know you've been doing some net testing across both of your projects. Do they play nicely? Does ranch and lawyers play nicely in terms of the flow sheet, or how much kind of a complexity do they add when you try to marry the two?
So maybe I'll talk about the geology and then pass it over to Ian about how we process that. So on the Lawyers project, as I mentioned earlier, it's a low sulfidation epithermal system, gold, silver, and it's very clean. I mean, there's virtually no sulfide there. There's no nasty stuff in it. It is just a very simple system. The Ranch project to the north, it is a high sulfidation epithermal system, and these can be metallurgical nightmares. We're very fortunate in that it is also very clean. Like there's no mercury, there's very little arsenic, but what there is and how it differs mainly from the Lawyers project is it has a lot more sulfide in it, mainly as pyrite. So they're two different systems, but I think they will play very nicely together. And I'll let Ian explain what the current flow sheet is and how that may change going forward.
Yeah, so when we talk about flow sheets, especially when we talk about a cost in terms of OPEX or CAPEX, it really is driven by the grinding, right? So grinding is a huge issue. And so we've been really fortunate. Lawyers, I can be honest, as a mining engineer, it's one of the most boring projects I've ever worked on because it was so vanilla, right? It was a crusher, a ball mill, leach everything, Merrill-Crowe, which may be a little bit different because of the silver content, and you produce a doré. But it was a relatively coarse grind. We were looking at 150 mesh grind and getting excellent recoveries from leaching. And then you go over to the ranch project, and it makes it a little bit more interesting because it's got the sulfides associated with it. But also, you know what it does have? Incredible recoveries based on flotation. So normally when you look at big numbers or big costs or et cetera, it's when you have an issue. And so you were starting from a point where at least we know we can get solid recoveries. And a modification, I do believe we're doing the metallurgical test work because we have different scenarios of how we'll manage that, right? Perhaps adding a flotation circuit to produce a concentrate, or doing an intense leach on a concentrate and then going to whole ore. There's a lot of different options, but you're starting from a point where you have the high recoveries. And so adding a leach circuit is not, it doesn't break the bank, right? What breaks the bank is when you have to really do intensive grinding or different little tricks in order to get the recovery up. So we don't see these as major modification. Actually, when we did our internal modeling just to look at how this all would work out, we took a very, very, very conservative approach and it still was not that big of a deal. So we look forward to getting the results that should be coming in, by the end of the month. The majority, when you'll totally finalize when the updated resource comes out. But we're already doing that metallurgical test work now to kind of come up with what the modifications of the flow sheet would look like. But we don't think there's going to be anything in it that's going to be a big surprise or a big ticket item that would dramatically change the overall project scope.
No, excellent. So we're kind of circling around to the end here, gents. And so a couple of questions, right? I mean, 2024, we can expect a mineral resource estimate, kind of the new universal, the merging of the two. Can expect an updated PEA. Can you guys give an updated timeline on when the market might expect those?
So, I mean, we still, before we get to either of those major milestones, we still have quite a lot of drill results to come out for the Ranch project, or Thesis 2, Thesis 3 in the Bingo Zone. So stay tuned for those in the near future. And then the MRE, it should be early Q2 next year, and we're on track for that. And then early Q3 for the PEA. So two huge catalysts for the company coming this year. And I think it should be transformative for the projects, the company, and beyond that in 2024. And I don't know if this is where you were going to go, Matthew, but we don't have a plan in place yet. Well, we have multiple different scenarios for what 2024 may look like, but I think some of these will be dictated by the gold space, how if there's ever sort of any reconnection between equities and the price of gold. And how market responds to these major catalysts for the company. So in a couple of months, I think we'll be in a much better much better position, let's say, to give you a better answer on what any sort of work would look like in 2024.
Yeah, and I think that's an extremely valid kind of. I mean, the market does dictate what you do and how and when, right? I mean, I know that you gentlemen kind of referenced. I mean, you're happy and content to plant your flag on lawyers as is. I mean, I think that as someone who follows your company, and I'm sure others that follow your company would love to see your ranch get more holes drilled into it. But I mean, that's just the vagaries of the market will, of course, as you say, kind of define that. Last question here. I mean, we're heading back into kind of another round of conference season here. I notice you guys are heading to VRIC. I'll be there. Just want you, I mean, just kind of curious, just chewing the fat here at the end of it, but what do these conferences offer you? I mean, what does this offer you? What are the opportunities that are provided to you when you head there, not just as an investor, but as a company? And then maybe, how does that compare to PDAC, right? PDAC versus VRIC, kind of East versus West there. Do you guys we'll finish on this question?
I mean, I think VRIC is a great opportunity for shareholders to come by the booth and talk to myself or Ian or any member of the team. And these interviews are fantastic for getting the message out and going over specifics. But I'm sure individual investors have different questions and different ideas about certain aspects of the company or the project, and really having that time kind of one-on-one at the conferences I think is extremely helpful for investors and for us as well. I mean, it's great to get feedback. So I think VRIC's a great platform for that. PDAC, not so much. I mean, really at PDAC, I see the value for certainly for myself. I mean, we do have a booth there as well, but it's often pretty chaotic, and most of my time at PDAC is tied up in meetings, and so it doesn't quite have the same feel. But I think that's why you go to multiple different conferences, because they all add a different value. So, whether it's VRIC or PDAC or kind of individual one-to-one speed dating type conferences, it targets a different audience and gives different investors and shareholders an opportunity to talk to us on a different platform. So I think they all add value.
Ian, do you have anything to add to Ewan's comments on that?
No, I think that how Ewan summed it up was perfect. Each one gives some value, and I think even from us being able to tell the story of what's going on, it's obviously we need to keep shouting, right? Because I don't really think that market really truly has grasped the quality that this project has and how it'll truly be transforming over a very short period of time. So we just keep on hitting the drum, keep on getting on the horn. And each conference has a different way of providing value of doing that.
Yeah, no, awesome. I think you guys are right that there will be a pleasant surprise at some point with the market in terms of this upcoming PEA. It strikes me that there's going to be some very healthy numbers coming out of there. Final thoughts, Ewan, I guess, Ewan and Harris, any final thoughts that you guys wanted to touch on that I maybe didn't give you an opportunity to before we say goodbye?
I mean, no, I think you've kind of nailed it, but just to reiterate, more drill results to come over the coming months. New mineral resource estimate across both projects for the first time. And I would emphasize that, we don't have any numbers yet internally for that resource. I mean, we're still working through that, but in my mind, whatever this resource is very much a starting point. And there's a lot of blue sky potential coming from the Ranch project, and not everybody says that, but it's literally, there's 40 square kilometer structurally controlled epithermal field there, where we've got known targets that will contribute to the resource. We've got up and coming targets like the JK zone, the Steve zone that are showing great potential and could build out independently to add significant ounces going forward. And then we've got 20 plus targets, and that number never goes down. That's because we're continually adding targets to that. So over the coming years, there's real potential there to add significant ounces to whatever this MRE is. And that goes for the PEA as well. I mean, one of our main objectives out of this year's drill program, and not to get into Ranch, because I know we'll probably talk about this at another time, but beyond defining the high grade underground at Lawyers, was targeting near surface high grade mineralization at Ranch. And that has been extremely effective as well. And we've had some good surprises there. But that will, feed into the new PEA. Again, I see that as being very much a starting point where we can continue to improve the economics on this project with new discoveries, with expanding the mineralization that we already have at Ranch. So huge catalyst for this year coming up. As I said, I think it will be transformative. And again, very much a starting point for Thesis to build on. So yeah, with that, I'll finish up.
No, awesome. No, thank you. And Ian, I'll give you the last chance here. I know you guys have 5 minutes till you got a meeting here, but any thoughts from you, Ian?
Yeah, I just the only thing that I think I can add on this is that since the merger between the two companies, we have been laser focused on what we want to do and knowing what we want to try and accomplish with the work that we do. Even when we talk about 2024, it's because there's a lot of different levers on it between market performance, how market reacts to this updated project. It's not because we're not thinking about it. It's something we think about all the time, because we want to make sure every little step that we make from this point on is creating significant value. And we're really excited about the information coming out this year, because we'll be able to demonstrate we've been able to do what we said we were going to do, and that's the way we like to work.
Excellent. Well, I think that's a pretty good mic drop moment, guys. And so, yeah, Thesis Gold, Ian Harris, Ewan Webster. I'll get you guys back on for Ranch, but in the meantime, thank you for your time, and have a good day, guys.